Hello there, I hope that you are doing well. Welcome to this new episode of the series. During this episode, I'll be sharing with you how I was able to trade 2 market maker buy models on the Nasdaq in a row. These market maker buy models presented itself during the 9 AM RE candle, and the second one also expanded higher throughout the 10 AM RE candle. Now here on the RE chart of Nasdaq, and as outlined throughout my review of this day, which was the 17th of June 2025, if you're watching this at a later moment in time, I had mentioned that I was anticipating Nasdaq to be stuck between this BC right here and this CB right here, until Nasdaq would expand either below this BC or above this CB. I would anticipate range-bound delivery back and forth price action. What I would like to see is that the market took out sell-side liquidity resting below this low, which formed inside of that RBC on the lower end, and we saw the market take out the low which took out that initial low right here. Do you see how this right here is a perfect sweep of liquidity? We then saw ATM expand higher, but notice that we rejected the midnight opening price. Why? Because at 8:30 AM there was a high impact news release. Now, based upon what you're seeing in front of you, I would want you to understand the following. Between these lows right here, there was SMT between Nasdaq and the Dow Jones. And that SMT is important because that SMT is signaling to us that a potential low formation is taking place inside of the lower end of our anticipated day range. Meaning, on the market updates, I had outlined that if this SMT is going to last between Nasdaq and the Dow Jones, which took place inside of this RBC, that would be a very important sign to me moving forward. Notice that I will be dropping into the lower time frame shortly, and I'll be looking for a buying opportunity. Notice that I'm waiting at this stage and the time is 9:50 AM. I'm waiting for the market to drop lower, and the reason why I'm waiting for the market to drop lower is because I want to be buying as the market is dropping lower. And here I'm going to pause the recording shortly, and the reason being is due to the following. Do you see this big down close candle which is currently being delivered? This huge down close candle. That candle printed at 9:15 AM. Notice that the SMT detector on the lows right here is signaling 90-minute cycle SMT with the Dow Jones relative to the 7 to 8:30 low. That right there is important to me because that's signaling to me that a potential swing low is in the making for this new cycle. Notice that we took out sell-side liquidity resting below these relative weak lows right here. And in my mind, I'm already viewing this down close candle as a bullish order block. Why? Do you see how quickly price manipulated lower, setting up SMT right here at 9:15 AM, which is the end of our macro window? To me, everything is beginning to signal, hey, we might be forming a low here to begin expanding towards the upside soon. 9:30 AM open takes place within about 15 minutes, and therefore that's something I'm interested in potentially looking for distributions to take place. Notice that there was SMT on the highs as well right here, 90-minute cycle SMT with ES. However, I view that SMT as simply a false SMT. Why? Because I'm bullish, I'm expecting higher prices, and therefore I'm aware of the SMT, so I'm aware that it is a potential warning sign. However, because this SMT got established at 8:30 AM, this could just be a manipulation leg for this repricing lower to engineer more buy-side liquidity, trap everyone into believing that the news was weak, so to say, sell the news, and therefore eventually begin repricing towards the upside. What I will be doing is I will be dropping into the 15-second time frame, and the reason why is because I'm going to be using micro market structure to frame the market maker buy model. Original consolidation up here, and do you see how slow the left side of the curve was? How much back and forth going there was? That right there is the perfect left side of the curve for a very clear and clean right side of the curve. The left side of the curve determines how the right side of the curve is going to deliver. Notice that the market is getting above that previous 30-minute cycle low right here, this low. And notice what happens here. Do you see how price found support inside of this one wick of 9:50 AM, and then went sideways? What's happening here is that high frequency trading algorithms are beginning to fire their long positions. That's why price is being held right here. They are being offered the opportunity to fulfill their longs around this price right here. The moment that I see this large green candle right here, this big green candle be established, I'm interested. Why? Because that right there is a sign that high frequency trading algorithms are in fact wrong. So do you see this BC which forms? Beautiful algorithmic signature, isn't it? That BC forms as price is expanding back above the previous 30-minute cycle low. So do you see how I'm framing a previous 30-minute cycle low purge to revert? I've already outlined this in my mind before this right side of the curve takes place. I've already basically anticipated this whole delivery. And this is a typical time cycles purge and revert. Notice that that is the level which I'm anticipating price to draw towards. And I'm annotating everything as well clearly. But what's funny is that the majority of people that watch these videos, they just watch through them and that's it. They don't pay attention to the details. But I'm literally outlining the whole thought process in front of you. Market expands above this high. Why is this high important? Because it set up the final run towards the downside. So now I know I'm on side. Notice that we have a sequence of imbalances right here which formed. Ideally, I would like to see this be left unfilled. And the reason why is due to the fact that would signal that these were breakaway gaps and price would really begin to rush higher soon. Notice I'm outlining this opco candle. The reason why I'm outlining this opco candle because it was a previous 10-minute cycle high. SMT was present with ES right here, but now that SMT got invalidated. So ideally, I would like to see this opco candle function as support and price. Notice, however, that we do not close above it and the market instead rejects it. We take out sell-side liquidity and the market drops lower. The moment that I see that price did not close above this opco candle is to me the sign, hey, these gaps might be revisited. Meaning they might want to offer one more retracement into a discount before the real expansion higher takes place. Therefore, what I'm doing is I'm taking my stop away from break even and I'm putting it at the lower end of this lowest BC. This should never be fully traded into. The lower part of this lower imbalance has to remain open. Why? Look right here. This candle should function as support and price. Do you see how we have an imbalance right here on the left side of the curve? Do you see how we have this high which got displaced through this imbalance? Do you see the price that we're trading around? We're trading around 0.50 and that is a level which I know I need to see function as support and price. Why? Because what's the level I'm anticipating price to draw towards? 100. Hello. This moment in time I'm waiting patiently and I'm waiting for one more push lower from this CB right here because it's in that push lower that one more manipulation leg is taking place where smart money is being allowed the opportunity to go long. Notice how close the market comes to my stop right here, but notice that it stops right in advance of it. Why? Because this BC has to function as support and price and it has to be left open, the lower end. Notice that I'm writing down final chance here and this is basically me saying it has to begin running now. It has to begin expanding higher quickly. Notice that the time is coming near 9:30 AM and at 9:30 AM, what can we anticipate? Distribution. 3-minute cycle SMT on the highs right here. Is that the short? Absolutely not. Why not? Because it's simply ES front running Nasdaq and that is signaling that we're likely going to see Nasdaq catch up soon and when it does, we can anticipate a beautiful expansion higher. Notice that the market retraced multiple times, so if you were not long yet, there were multiple opportunities to go long. Now a question which you might have is how do you know when to trade in advance of 9:30? How do you know when to wait until 9:30 has passed? The answer to that question is quite frankly whether or not you see a swing low formation take place in advance of 9:30. I'm outlining that this is a swing low formation right here. Because this is a swing low formation and because everything is signaling to me that this low is going to set up the run towards these relative equal highs up here, that original consolidation, 9:30 will be the volatility injection which will make it happen. Therefore, if you see the signs present of a swing low formation taking place in advance of 9:30, so you see a previous cycle low purge and revert model, then you know 9:30 should distribute higher. And that is for me the factor to determine whether or not I'm going to be looking to trade prior to regular trading hours open. Notice that the market now expanded above this opco candle. So now I'm monitoring this red box. This red box has to function as support and price. We can wick below it, however I want to see the bodies keep on closing inside of it. And here the 9:30 open comes. Notice that the market trades into this BC and it beautifully expands towards the upside. This right here is what it looks like when you're aligned with IPTA. Notice that I'm parsing above that previous cycle high right here. And I'm monitoring whether or not the market is going to reach that RECB. That would be my next objective. And it looks like it will, but what you will see eventually is that the market begins to roll over. This moment in time, I don't really care anymore about the trade. The reason why is because I've taken partials, I've already secured a profit, and now I'm simply leaving runners to see whether or not my final objectives will be met. Notice that the market is rejecting that high, however, and it is beginning to trade into this large imbalance which got established. In my mind, this is still allowed, and the reason why is because as long as this imbalance functions as support on price, this could be engineered buy side liquidity for a later moment in time. If price, however, would get below this imbalance, then to me, sell side liquidity resting below these lows comes to mind as a potential draw. Why? Well, we took out the previous 30-minute cycle high, and this is where the previous 30-minute cycle low is. So do you see how I keep on referring back to purge and revert again and again and again? When you start to see these time cycles, their highs and lows, be taken out, followed by reverts towards the opposing side of liquidity, man oh man, it's beautiful. And you might be wondering, on what days does this occur? On what days can we anticipate this? The days on which we can anticipate that this type of delivery is going to take place is when we're anticipating not large ranges to be established. Why? Because what IPTO will do is that it will simply run the highs, revert towards the lows. Run the lows, reverts towards the highs. And that right there is a beautiful way of trading, and it's actually what I prefer because I can see very clearly what price is referring to all the time. Notice how slow the market is trading inside of this BC right here. To me, that's a big warning sign, and the reason why is because if price was in a rush to get somewhere, to run towards this objective, it would have simply just retraced, expanded. But the fact that it's so slow right here is already basically a huge sign to me of, okay, you know what? We might actually roll over and draw towards my stop. If that would occur, no problem. And the reason why is because the stop is thrilled to break even, and now it's simply a waiting game. And this right here is the part where the majority of you get impatient. You begin thinking to yourself, oh, maybe it won't run, maybe it will just take me out to break even, maybe it will just roll over, etc. and I lose this open profit, etc. But what if it does form a low here and it does expand towards the upside as I've outlined to be the anticipation for price to get into this blue box? So do you understand what I'm getting at? You must be able to detach yourself in that sense from what is happening. Never ever look at the P&L of the position. You could change it into ticks if you'd want to. That's something which is common practice. But in my opinion, it's better to train yourself to get used to seeing numbers fluctuate. Notice that SMT is being established right here, and the reason why that was important at first was due to the fact that this could set up the repricing lower, but notice that Nasdaq took out that SMT, validated it, and then we saw the market eventually begin rolling over and drawing towards the downside. Now what's interesting is the following. The fact that the market is going sideways right here, in my mind I'm already thinking to myself, wait a minute. If price is now going sideways right here, and we have yet to reach this blue box, which is my objective, and we see the market expand towards the downside this quickly. It's interesting, isn't it? Why? Because this is the engineering of more buy side liquidity. My trailed stop gets hit, and at this moment in time, let me just move this. What I'm doing is I'm waiting. What I'm waiting for is I'm waiting for this low. I'm monitoring this low to be made jacked. If I see the market take out this low, reject it, then it signals to me, hey, we're actually forming a new low to then make the real move towards the upside. So do you see how I'm nimble with my expectations and just trade from level to level again and again and again? Now the market takes out this low, pay attention to time. Bottom right. What time are we near? We're near the marker from 9:45. So here it's 9:45. And do you see how the market is again dropping towards the downside right here? Open, low. What did 9:15 do? Open, low. In my mind, I'm referring to this sequence of down close candles right here. Potential bullish order block. And notice that the market came back above the previous 30-minute cycle low again. I'm going long inside of the retracement into this open right here. And the reason why is because when you pay close attention to the delivery right here, do you see, and what I'm about to share with you, and you're probably going to think I'm a bit crazy when I share this with you. And you're probably going to be like, wait a minute, what's he on? There's a direct correlation between algorithmic price delivery, how these markets move, and music. Imagine that you're listening to your favorite artist, your favorite song, so to say. The song has a rhythm. The song has usually a build-up, and then it has to drop. Then it has the main verse, so to say. In price delivery, the exact same logic applies. So how do I know the low is in? How do I know that a change in the state of delivery has taken place? The way that I'm able to see this is by paying attention to the magnitude of the delivery before the SMR, and the moment that I anticipate an SMR to be in and I see big green candles in my favor, think of imbalances, then that means, hey, we're changing from sell to buy program. The music is beginning to change. The music is beginning to speed up. The music is beginning to basically share, okay, we're now going to begin this new rhythm, so to say. So in this large upclose candle right here, which is taking place at 9:45 a.m., there are lower time frame imbalances. I do not need to drop into a time frame lower than 15 seconds to see this, because you can already see that price expanded higher very quickly and that this candle was bigger than the previous candles, as you can see. Slow down, speed, immediate rebounds taking place inside of this candle's wick right here, and that is where I'm buying. Every retracement inside of this wick right here is a buy. Into this sequence of imbalances as well, into this previous 30-minute cycle low, etc. This down close candle becomes a new bullish order block, which has to function as support on price. Stop will be trailed to this down close candle is low. Why? Because we expand, retrace, expand. This is a fractal market making buy model. Price should never take out the low right here. Notice that the market reprices into this sequence of imbalances on the left side of the curve. We can anticipate some form of rejection from there, and the reason being is because price might have a hard time with displacing through this range. Why? Because we have what? Look at the price. Look at the BC. Look at the sequence of imbalances. Look at this low right here. I'm buying inside of this BC right here. Why? Because I'm seeing everything signal to me that we've changed from sell to buy program. So every single retracement lower is being bought up by smart money. Why? Because they know price has yet to be repriced into this blue shaded box up here. Think back to what I started the whole daily analysis with. The anticipation that price would be stuck between this lower blue box and the higher blue box until we would get outside of that range. So do you begin to see how I'm already preparing myself hours in advance for what the day is going to do? Literally throughout my market review, I had outlined, okay, blue box, have those on your charts, that's it. When the morning session then begins to show the signs of indeed delivering that way, and we see buys liquidity be engineered in advance of that higher blue box, beautiful, right? Notice that we saw SMT be established right here by the SMT detector. However, when I was looking at the charts myself, I couldn't see this SMT, so I believe that was a bug. But notice that we saw the market expand towards the upside very quickly. Do you see how quickly the market expanded higher? Original consolidation, sells off the curve, buys off the curve. This low has to remain intact. Do you see that this is exactly the same as what I just outlined right here inside of this small fractal? It's MXM all the time. And when you become good at recognizing MXM, I promise you will never be looking at these markets the same way again. Market make a sell model, do market make a buy model. But hey, this sell model had a bias of the curve, which I also traded. Why? Because we had a market make a buy model to the left. So what you could say is market make a buy model, market make a sell model, market make a buy model. Beginning to connect the dots. At this moment in time, there's 10-minute cycle SMT between Nasdaq and ES, where we saw ES already take out this high, whilst Nasdaq didn't yet. And that right there, to me, is basically the sign of, okay, it has to run now. It's allowed to retrace one more time, but this BC has to function as support on price. Notice that it displaced through the 930 open, longs are being refilled, and how do you know that there's an algorithm which delivers price? This right here. You cannot tell me that this is buying pressure which is stepping in at 9:30 a.m. inside of this BC, inside of this CB. Do you remember that old red box? That old candle which I extended to the right to frame the long in this area for 9:30 distribution? I didn't extend it on purpose within my recording because certain things was simply not willing to share with the public. It's that straightforward, but extend this box to the right. Market now trades above this BC, 9:30 a.m. BC right here. And at this moment in time, I'm anticipating that this consolidation which is taking place is again engineering of more buy side liquidity. And I'm sitting comfortably on my hands because I know that 10 o'clock open is around the corner. And what should 10 o'clock do? 10 o'clock should distribute towards the upside, towards objectives. 10 o'clock comes along and we see the market beautifully expand higher, taking out buy side liquidity resting above this high. And to be fair, right here, I want to speak a bit about trade management. Because I'm not happy with my trade management. And I know that's probably very weird for the majority of you to hear, because you're probably looking at my executions and you're like, how? How the hell are you able to do this? But for me personally, when I reflect upon this trade, I'm very happy with the executions in terms of entering, stop loss placement, drawing of stops, etc. All good. However, there's one thing which I'm looking back at, which I'm not happy with. And that is what's happening here. Where I was too greedy to partial above this high. When 10 o'clock opened high. This should have been a partial. And the reason why was due to the fact that what could have happened was that the market took out this high, engineer more buy side liquidity for a later moment in time, and come back all the way towards the lower end of the range. And looking back at the whole trade, the second trade in particular, first trade, very happy with. Perfect. Perfect trade. Absolutely gorgeous. Second trade, entering and trade management, good. However, partials, not good. This should have been a partial. 10 o'clock open high, taking out previous 30-minute cycle high, stopping again in advance of that higher time from objective. So right here, I'm outrunning this sequence of imbalances, and I would absolutely want to see them function as support and price. And the reason why I mentioned this, by the way, is because my goal is to guide you into removing all subjectivity from the marketplace. My goal is to make you help developing your protocols. And my framework was the following. My framework was, okay, 9:30, 9:40. We saw the market engineer high right here. We saw market engineer low right here. 9:40 to 9:50. Manipulate lower, taking out previous 10-minute cycle low. And now moving period RTH. Form a low. What should 9:50 to 10 do? Expand towards the upside. We stop in advance of the objective. So what is like going to happen? 10 o'clock distribute. Therefore, I should have definitely taken a partial. But I don't beat myself up about that. I don't get angry. I don't get upset. But it's just something for me personally that I'm looking back at and thinking to myself, okay, next time, partial. And don't get greedy, get the better hand of you. Because when the market is retracing like this, yeah, I'm happy that we found support inside this BC as we should have for bullish order flow to continue at the midnight open, of course. But from a piece perspective, it's not nice seeing the market drop 30, 35 points after we clear buy side liquidity pool right here. And that's why I'm sharing it with you. Now, what's important to note is that at this moment in time, the market has to find support inside of this BC. Notice that the market came back inside of the initial BC as well, which I had outlined right here. Price is trading below the midnight open. So in my mind, I'm thinking to myself, it has to begin running from now. If it doesn't run now and we would take out this low and take out that imbalance, then it would signal to me, okay, I need to be out. But do you see how much unrequired stress gets put on myself in that way, where I could have just parked up here, taken profit, because the difference was only 5 points, guys. But yeah, it is what it is. I'm human, and yeah, definitely a lesson for the next time, so to say. But so far, everything is looking good. And the moment I saw this low formation, I knew we would run towards this buy side liquidity pool and we would run towards my objective. So all in all, happy, yes, because the market delivered exactly as it should have from a basically order flow perspective and from a time perspective. But within the grand scheme of things, I do believe that looking back at this trade, partials should have been taken earlier. And that is just something to hawk, so to say. And the majority of you probably listening to me, you're like, what are you on about? The trade is panning out exactly as you had outlined. It's delivering, it's beautiful. This is beautiful price delivery. It's IPTA in sync with you. Yes, however, for me, And I'm parsing inside this form imbalance right here. Do you see that? 10-minute cycle SMT with Dow. I need to see that get invalidated within the upcoming minutes. Look, I'm a big believer in making sure that you always look to grow. That you always look at, okay, do you see how the market displays through this form imbalance? Retrace into that has to function as support on price to set up that run higher. Why? Because we have 10-minute cycle SMT with ES just got invalidated, and there the market reprices higher, and it's very close towards that higher time frame imbalance as we had outlined. But what I was going to say was that, and this is where I'm parsing again, and the reason why I want to partial in this area is due to the fact that this is that objective. Do you see how the bodies are respecting that imbalance right there? That's signaling to me, okay, get something off. Now, the reason why I want you to understand what I've just outlined to you and what I shared with you is the following. Understand that there's always room for you to grow. There's always room for you to improve. And if you look for those places where you can improve, where you can look back at your own executions, even if they're profitable, even if the outcome of the trade was profitable, and you can still find the courage to say, hey, I should have done this better, and I'm going to do it better next time, that is where you truly go. So I hope that you found this episode insightful. Please let me know. I want to wish you good luck in your studies, and I look forward to speaking to you soon again. Be safe.